What's up everyone, it's Caddy with MoneyVest. So this is going to be a full technical analysis on the Magnificent 7 and big tech stocks. So hope you all are ready, and I will be going over volatility, percentage of stocks trading above or below their moving averages, so some of the market breadth indicators, as well as big tech Magnificent 7 companies and their analysis, so that it helps you with some tradable opportunities here in the coming weeks here, and of course identify really important support levels and demand levels and resistance and supply levels as well. As always, if you enjoy this video and find it helpful, all I am asking in return is you drop a like and of course subscribe to the channel. Really hoping to get to 300 likes on this video, so let's see if we can kind of crack that threshold here. So link's going to be down below if you are interested in joining us, and of course getting access to all the MoneyVest benefits, including all the trade alerts and trade ideas, as well as all the members only private videos and benefits as well. So link's going to be down below. The first week of the month is the best time to join. So first things first, let's discuss volatility. So VIX for the longest time in 2024 has been very muted, and as you'll notice that we haven't really seen a significant spike in VIX for a really long time. So this is where most of 2024, 2020, towards the end of 2023 was. Since November, we haven't really seen the volatility above 15. So it's just really been very muted, kind of trading back and forth here in that range. But more recently, though, as you'll notice that it's now starting to kind of crack above the 15 to 16 levels. So this is really where we are, and we did see a pretty significant jump on Thursday. So this right here was the green candle, resulting in a huge spike in the volatility. As you already know, that the 20 to 18 level is a huge threshold to pay attention to. Last time we were at those levels, markets did represent a pretty nice, pretty significant buying opportunity, not to mention much higher levels in the 28 to 30 levels. So again, this right here is going to be some other levels to pay attention to, 28 to 30, where it will start to become a no-brainer buying opportunity from a market standpoint, because when the VIX is high, the markets do end up selling off because of that negative correlation. And this right here is one of the best fear gauges, fear indicators to look at from a market perspective. And again, you can see this from this chart over here as well. When the VIX is high, it is quite literally the time to buy, in my opinion, and that's exactly what I'm going to be waiting for the VIX to get up to that 18 to 20 levels, possibly even higher to beyond 28 to 30 levels as well. As we have already, of course, traded down in these muted levels, the markets have continued to drift higher and higher to new all-time highs, but markets are off of their highs at the moment, as volatility did spike a little bit on Thursday, as I mentioned earlier. So really, it's a name, patience is the name of the game, and that's exactly what we are doing at the moment, just kind of waiting patiently and allowing for the prices to come to us as the VIX potentially makes its way higher beyond 18 to 20 levels, possibly even higher. This right here is going to be percentage of stocks trading above or below their 200 simple moving average. So it's a very good sort of market breadth indicator, and as we have already discussed in our previous videos, every time this gets inside this red rectangle, it is most certainly time for us to be super careful and cautious, considering how overbought the market becomes. And even from a technical market breadth standpoint, if majority of stocks are trading above their moving averages, that is of course a very optimistic, very bullish market to be in. But at the same time, it encourages us and forces us to be cautious and be alert because of the subsequent pullbacks and sell-offs. So this right here has happened over and over again. I don't have to go over it again, but we have talked about this before, that this right here, the red rectangle, is a pretty good representation of how overbought the markets are, and eventually sees a bit of a pullback every single time. More recently also, we've seen a pullback here. You can see once, twice, three times, and right now we're once again in that sort of square little 60 to 65% level, which basically means that majority of stocks, 2/3 of the market, trading above their 200 simple moving average. Now, this doesn't necessarily mean that this is eventually going to lead to a pullback. Not saying that. We could most certainly kind of continue to drift higher and get inside this red rectangle in the highs of 80 and 90, but is this something to keep in mind that, okay, majority of stocks, very strong momentum, we continue to push higher. The risk reward is really what we're here to assess. And at the moment, right now, the risk reward is not that favorable. The moment we get inside this level here is where I would become even more cautious from a technical analysis standpoint. And I'll be waiting for when we do start hitting that 34 to 35% mark. Possibly even lower, sub 20% would be ideal. These right here are some of the best buying opportunities the market's given us in the past. And these are very serious, good buying opportunities, as you can notice. Every time this index come down to like 19, 20, 15% is, again, a no-brainer buying opportunity. So what we're really looking for is a higher VIX and a low market breadth, with the markets obviously down 7, 8, 10%, 12% from its all-time highs. And that's when we start deploying cash back into the market more aggressively. So that's really the whole idea, the whole analysis behind risk and reward. This is again S&P 500 stocks trading above their 200 SMA. So again, you'll notice that this right here very much trading inside this red rectangle over here, trading inside the red rectangle over here, trading inside the red rectangle over here a little bit, kind of coming up to that level. And right now, as you'll notice, that we are once again inside the red rectangle at just over 76%. Again, not saying that we can't go higher, because we certainly can get up to over 94%. But of course, just got to be super careful. And this right here is going to be that optimal level for us to once again start buying stocks again in the 30 to 35% level. So again, really, it's a combination of when the VIX is high and this market breadth index is low for when that perfect confluence of buying opportunity represents itself. This again, perfect buying opportunity. Pretty decent buying opportunity, one of the best buying opportunities, really good buying opportunity over here as well. And again, very good at buying opportunity over here. Perfect buying opportunity. As you can see, when this index is low, it is quite literally a no-brainer buying opportunity in the market. So that's really what we have to wait for us to start deploying cash. And this is where patience comes in, right? A lot of people say that, Caddy, with your type of analysis, we would just never be investing. No, I mean, you would. This is quite literally facts here. So this right here, invest here when the markets are down, invest over here when the markets are selling off, right? Invest over here when you already know that these are oversold conditions in the market. This is where patience comes in, right? This is where we as investors need to be patient and understanding of the fact that this has been a very strong bull market. Nothing wrong with diversifying and, of course, dollar cost averaging into broad-based ETFs and index funds on a regular basis. By all means, if that's your investing style, go ahead. I'm doing that on a regular basis as well. Been buying VUG, buying SMH, buying CIBR. So those are ETFs that I'm kind of investing in long term. So I'm buying on a weekly basis. But when it comes to really starting to be more aggressive and deploying more cash, these are some very good indicators to look at, especially when you're looking at tradable opportunities for individual stocks, even options on indexes or trading opportunities on indexes itself. These are pretty good indicators to look at when you are looking at investing or tradable opportunities and you want to turn the dial and be more aggressive. This right here is, again, NASDAQ stocks trading above or below their 200 simple moving average. And once again, every time we get up to that level, inside the red rectangle, it's time for us to be cautious and careful. We're not quite at that level yet, but we've really just been consolidating sideways. So if you do end up, let's say, seeing a bit of a pullback, next level, a more important support is going to be 23 to 27%. On this index, of course, we could continue to drift higher. Not saying that we can't, but just got to be aware that we are, of course, at an upper limit here compared to where I would like to personally be a strong buyer in the market. So these, again, very strong buying opportunities, excellent buying opportunity over here for the market as well. Now going over to S&P 500, so this right here is SPX as it continues to drift higher. So this right here was the last big pullback that we saw back in October and November of 2023, and that's exactly when we came back. This is October and November of 2023. If you go back a little bit, so again, you can see that this is October, November of 2023. So last time we actually got a serious buying opportunity from the market. And this again was October and November of 2023. So you can kind of see for yourself, like I'm not making this stuff up, where the volatility is high. So this right here is the area when the VIX is high. This right here is the area when this indicator in particular is lower. So market breadth is down, oversold conditions, volatility is high. And what the market is doing, markets are down, right? So if you come back to S&P 500, this right here is the sell-off that we witnessed in the market. Then we came down to SR2, which is our very, very important support level. That's the second area of support, kind of close to 4,200. And then since, it's absolutely ripped higher to new all-time highs. So that's the entire idea, okay? It's not kind of putting you away from investing. No, timing the market is never the correct way of investing. Time in the market is what's most important. So we're not here to time the market, but essentially keep investing, keep dollar cost averaging, and of course, especially broad-based ETFs and index funds. But when it comes to understanding the risk and reward, that's where this analysis comes into play. I will never be able to tell you the precise location, the time, or the price when to buy or sell, but I will. And this is, my certainty with myself. I will be able to tell you when the risk rewards are optimal and most favorable, right? Because we look at volatility, we look at market breadth, we look at technical indicators, we look at support, demand, resistance, and supply levels, as well as the overall momentum, the overall direction, the overbought, oversold conditions. So there's a lot of things that when you combine them together, you can get a pretty good sense of where the risk reward really is. And that is what I'm here to tell you. I will never tell you where the top is or where the bottom is, but I will tell you where the risk reward is the most or least favorable. So that's where the entire analysis. And right now, and I can tell you, I will get some comments again on those YouTube videos, like I always do. Some sort of perma bulls coming on here and telling Caddy you're bearish or you're always bearish. Beginner investors, maybe new investors, I understand. But the idea is, again, if you've been doing this long enough, you'll know eventually that the whole game is trying to understand the risk and reward based on the present market conditions and never trying to predict the future, because nobody's ever been able to do that on a consistent basis. So that's where we are. And again, 56.20, 52.65 is actually going to be a resistance to keep in mind for S&P 500. So this right here again is going to be a very, very important level to watch. As you can see that we are getting rejected here at those levels. We consolidated sideways for some time, and then of course broke down pretty aggressively. So this right here was Thursday, broke down below this higher low trend line, as I would say. So this right here, very nice consistent higher lows, and then S&P broke down, and the next support really is going to be over here at 5,060. We've had a negative divergence continue, so as the market continues to trade higher and higher, so higher highs and higher lows, the RSI continued to trade sideways. In fact, even lower highs being formed from the RSI, which definitely does suggest a little bit of that negative divergence. So if you do end up, let's say, selling off, the first support is going to be that 5,000 all the way down to this first support level. Very, very important level to keep in mind. It's going to be sitting roughly at 4,700 to 4,780, and I think that's going to be a reasonable 4 to 5% dip for the market, which again is normal, is not anything out of the ordinary. Now, talking about the NASDAQ, same exact story. As you'll notice that we have just been consolidating sideways for some time. It's been trading in that range, coming up to those moving averages. Again, a little bit of that negative divergence on the RSI as well, as the price continues to trade higher and higher on the back of very nice support from those moving averages. But of course, the first support is going to be 15,900 down to as low as this SR1 sitting at 14.4 down to SR2, which is going to be sitting at 12.8. And that is perhaps one of the strongest areas of demand for the NASDAQ, where I do expect a lot of buyers to step in, although I don't expect the NASDAQ to trade all the way back down to those levels, because that would be a pretty catastrophic sell-off. I do expect maybe a first support level getting hit somewhere in the 14,500s, if of course we do see a reasonable size dip or a pullback, and that's going to be aligned with that previous resistance and of course that support level to keep in mind. And this is where patience comes in, right? This is exactly where patience is tested for us to, okay, understand, this is the time where risk reward is not super favorable. Yes, the momentum's in the favor of us as being bulls. Momentum is very strong. There's a lot of optimism around there. There's a lot of greed involved in this market, but this is not a time where I'm looking at long trades. I'm looking at going aggressive with deploying so much cash. It is what it is. Selling calls, holding right now, taking advantage of the momentum, taking advantage of the gains here. But this is not the market, in my opinion, to start looking at buying aggressively. This is a market to be patient for, allowing for the prices to come to us if and when the volatility does spike beyond certain levels and the market becomes oversold. This right here is going to be Apple. Now, Apple is still consolidating sideways. Now, there are a few things that I want to highlight. So this is the weekly chart, and RSI has come down pretty aggressively, so it's now trading at under 40. MACD has been trading downwards as well, as you can see, and so is institutional involvement. There's been a lot of selling pressure from institutions here in recent weeks for Apple. So as you can see, the L3 banker oscillator as it continues to sell off. So there is a lot of support here as considered this previous resistance, validated support, and right now we're just trading at that support again. So there is a lot of demand at those prices in the 170s for Apple. It's really a question of whether we're going to see that demand materialize and for the buyers to step back in to push it back over 190s. Still yet to be seen, but it is very oversold. In fact, we haven't quite touched this RSI level since end of 2022. That was the last time we actually saw the RSI as low as it is in September, October, November of 2022. And again, these right here are some of the times when the RSI was lower, because we did see a sell-off, a pretty reasonable sell-off for Apple at those times. But that was, again, previous resistance now potentially turning into a support. So an previous high is now turning into a new low for Apple. But of course, if you do end up, let's say, breaking down, the next support is going to be that second level that you see in the 150s, and perhaps one of the best support levels and areas of demand to watch for a potential swing trading opportunity back up to 190s. And that's going to be about a 30% potential gain upside for Apple. So keep in mind, first level of support still valid, at least for now. If you do end up, let's say, breaking down, second support level is going to be ideal, and the third one is just going to be chef's kiss, meaning absolute no-brainer buying opportunity for Apple, because that's going to represent over a 50% potential upside back up to all-time highs. And Apple, of all stocks, has almost always I say almost because right now it is lower from its all-time highs, has almost always recovered back to its all-time highs. Of course, things could be different in the future, but the probability of success is much higher for Apple than it is for any other stock out there. Now for Amazon here, higher highs and higher lows continues to push higher. Amazon has been an absolute beast in the recent weeks. So again, we've got, a little bit of an overbought RSI, MACD. There's been a lot of institutional involvement as well, and the price continues to move higher. We are coming up to that 4K Friday for Amazon after such a long time. So congratulations to everyone who's been holding and investing in Amazon. Super excited to see a new all-time high here, possibly next week. 188 is a level to beat, and that's going to be a resistance, double top resistance from back in 2021. It's been over 3 years, and Amazon's finally on the verge of breaking two new all-time highs here after a very successful run-up since 2022, towards the end of 2022 up until now. And as mentioned before, Amazon, in my opinion, is one of the best growth stocks out there. Still underrated for its potential in AWS, advertising, and other businesses that it's part of. So Amazon, in my opinion, of all the Magnificent Seven big tech companies out there, apart from Nvidia, Amazon is the next best competitor, or really I should say the next best performer, in my opinion, over the next 10 years. So keep a close eye on this one. Yes, short-term pullback is likely, considering how overbought it is, but support levels to keep in mind in 160s, down as low as 143 for Amazon. Talking about Tesla here, and Tesla I did a video on recently, so make sure that you do check that out. But this right here continues to be the downtrend of lower highs and lower lows. Very important support level that it's coming down to is going to be in the 150s, so that is going to be a very important level of demand, and of course previous resistance potentially turning into a support, and also my fair value also ends up in and around those levels for Tesla. Almost an oversold RSI at 36. MACD's been selling off as well, and of course lots of selling pressure on an institution level. So 150s, very strong support. Earnings are coming up at the end of April, so that's really what's going to dictate where the price goes next, and all the way down in the low 100s, also a possibility for Tesla in the future if, of course, earnings miss and guidance is also not that strong. So keep a close eye at 150s. Momentum is very weak. It's quite the opposite of Amazon, selling off lower highs and lower lows. And so 150, very important support. Resistance going to stay put in the 175 to as much as $200 per share for Tesla. Nvidia, on the other hand, pulling back a little bit. So really just consolidating sideways. There's been RSI pullback here. MACD's been coming down. There's been some pullbacks in the banker oscillator, so a little bit of exiting and liquidation on a institutional level as well. This, I believe, is the weekly chart. Actually, this is the daily chart, so we're seeing a lot of consolidation sideways in that range for Nvidia. Very, very, very important support level, I would say, in the 850s, 840s for Nvidia to maintain. If it does end up, let's say, breaking down below $800 per share, that's going to be that 50 simple moving average. And then, of course, the next level is going to be down in the 600s for Nvidia. So keep in mind, very strong momentum, of course. It's been one of the best performing stocks, over the last several years. In fact, the best performing, I believe, in the S&P 500. So support level is going to stay put in the 840s, down in the 800s. Very important levels to keep in mind. In case we get a breakdown, maybe it is time to start de-risking a little bit of that position here. Meta, on the other hand, hitting a new all-time high. So Meta and Amazon are clearly in a very strong uptrend. In fact, Meta could be just getting started again, considering that it's now on the verge of, again, the MACD crossing over the signal line, RSI also pushing higher very nicely. And there is some momentum coming back in from an institutional standpoint after couple weeks of consolidation, in fact, selling off sideways as well, getting a little bit of a breakout. Support level, very strong area of demand in the 470s, so 450 to 470s. Very significant level of demand and support here for Meta at those prices. Talking about Microsoft, and also I do want to mention that even on a daily chart, it is looking pretty positive. On a weekly time frame, it's starting to look very overbought, with the RSI continues to be above 75, which is considered overbought here, and MACD also continues to move higher, with, of course, a price that is incredibly parabolic at the moment. Of course, Meta's performed really well. So keep in mind that 450 to 475 level of support for Meta. Now, Google, on the other hand, had a very nice recovery. So we had a trade idea on Google, which did really well. So it kind of recovered back up, over 16% recovery. That is pretty solid. MACD on the weekly time frame, pretty neutral. And so is the RSI. And of course, we got the institutional investors starting to step back in more recently, as Google has recovered from its support of about $130, $131 per share. So this right here, but on the daily time frame, as you can see, we've got an RSI which got overbought, starting to pull back. So is the MACD, and of course, institutional investors also kind of tapped out on that demand. So resistance is going to stay put right here, exactly where it is in the 140, 155, 157, with a very strong support sitting right down here in the 130s. So again, talked about Google. This was part of our trade idea in one of our videos. Worked out really well. So again, if you want to get access to all the trade ideas and trade alerts and options alerts, link's going to be down below. We'll love to have you on board, and I will be sharing more and more trade ideas for individual stocks as more opportunities come up. Finally, we come over to Microsoft. Resistance is going to stay put in the 430s, a very strong support here in the 360s, and again, a very nice buying opportunity here in the 300s, low 300s to sub 300s as well. There is an overbought RSI, overbought MACD. We've got institutional involvement, which pretty much very significant. So if you do start to see any type of a pullback or exiting or quitting on that, or liquidation in that position, RSI is starting to roll over, and so is the MACD, then of course the price could also start to kind of dwindle a little bit at that support at 364 down to 350s for Microsoft. But of course, this has been a very nice consistent uptrend of higher highs and higher lows for Microsoft. But the valuation is also trading at a bit of a premium, so that's something to keep in mind for Microsoft as well. So hope you all enjoy this video and a complete update on the markets. The bottom line is we've got Microsoft, very strong uptrend. We've got Google, a very nice recovery and a reversal. We've got Meta Platforms, very nice uptrend. We've got Nvidia, of course, consolidating sideways after a very strong uptrend, so be careful on that one. Tesla with a very strong downtrend of lower highs and lower lows. Amazon with a very strong uptrend with the possibility of hitting new all-time highs here fairly soon, possibly next week. And Apple still struggling a little bit, along with Tesla, waiting for that reversal at that support level. So they have multiple support levels to keep in mind at the moment for Apple, and the broader markets and overall indexes are still trading at near all-time highs with a very nice momentum and pushing higher, but we just have to be patient a little bit more before we start deploying cash back into the market. So I will be ready as volatility continues to make its way higher, and of course market breadth comes down to more reasonable, more attractive levels from a technical perspective. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. We'll love to have you on board. As always, happy investing, and I'll see you all in the next video.